Hi, Leslie Hu here. At the time of recording, the Strait of Hormuz is closed. There is a few days after we were very happy about the MOU between the US and Iran. So from what I see, it's like even until now, anything can happen. A lot of uncertainty still surround the talks, the peace negotiations between the US and Iran. What I mean is that we can hear about a good news in the morning, after lunch, bad news. More bad news, more good news. So it's all like that, right? Until now, this is an uncertainty that I believe we are still facing. As you can see, the MOU is the US and Iran. Israel is not in it. So that's why I see there are still a lot of uncertainties between the US and Iran, whether they can truly sign or agree on a real peace deal and the Strait of Hormuz open, will never close again. Oil cargo start selling through the strait. Well, it's still a very big question mark. On the whole, unfortunately, that's what's happening. And we can, keeping our finger crossed, hope that the US is able to tell Israel, hey, stop all this. I want a true peace agreement with Iran. So let's see how it goes. In terms of market sentiments, it is still hoping for the best. Hoping that the US and Iran quickly sign the agreement and Israel, not say more or less, but Israel promise under pressure of the US or whatsoever that it will not strike again on Lebanon, on Iran, or surrounding area. It will not strike. So market sentiment, hoping for the best. Let's hope that this will come true soon as possible. Let's look at the oil and gold prices for this week. Let's look at the oil price first. This is the baseline. As I mentioned just now, there are still a lot of uncertainties moving forward pertaining to the peace agreement between the US and Iran. There is 50% chance that it will go below the baseline, and I'll just say it, and everybody pop the champagne. But unfortunately, there is also 50% chance that bad things happen. Maybe like missiles start to strike from Israel, start to strike again, and drones start to flying above Iran, so on and so forth. The oil price could go above $100. And the biasness, I always mention about the biasness for the bias team for this week is to the upward price momentum of the oil price, unfortunately, because of the risk, the uncertainty that is facing this whole area, the risk is still biased towards the upward price momentum of the oil price. Now, let's look at the gold price. Now, this is a baseline. And other than the needs or the contingency plan to keep the US dollar liquidity of the oil buyers, crude oil buyers, the gold price, because selling gold and get more US dollars is still one of the major ways, this will still keep the gold price under pressure this week. So it could fall below the low band of the baseline, that is below $4,000 per ounce. And this downward pressure is this downward pressure is also fueled by the expectation of no rate cut by the Fed for this year. And then on top of that, the bulls in the stock market is still running strong. It makes more sense that to allocate the capital which would have which would have stay in the gold market, be transferred out to the stock market, which give much higher return. That's why I see the pressure on the downward pressure on the gold price is still very firm this week. But based on what I have observed, at this moment, there is still pretty strong support for the gold price at the $4,000 per ounce. So at this stage, I will still see that it's still a tough nut to crack. But at the same time, I still reckon there is high probability that it will, how should I say, this support will break, will go away, and there is a chance that the gold price will fall below the $4,000 per ounce. So this is my view for the oil and gold prices this week. That's all for this video. Thank you for watching. See you in the next one. Cheers.